What's up, guys? Eric here, Mr. Fired Up Wealth. I've got a stock idea for you, something that you probably haven't heard about. I don't think it's ever been covered on YouTube. This is actually a small cap stock. It was a recent trip I had with my wife that actually sparked the idea, and it's taken me some time, but I've done some research on this thing. Wait till you see. I mean, this is really a recovery type play, and it's something that's right in front of your eyes that you don't think about. And it actually has an insane amount of recurring revenue, more than I ever would have imagined until I researched this company. Now, this trades at $25 a share. It's a small cap at about $2.26 billion market cap. According to Google Finance, it shows a 43 PE ratio as well. And some of the growth that it had was pretty incredible. If you look at the year-over-year revenue growth, last quarter, 346%. Now, it did have easy comps due to the pandemic. It was one that got hit pretty hard, but 346%. And this has a net profit margin of 21% in the last quarter. Any idea, any guesses what the company might be? Stay tuned to find out. You ever watch Beverly Hillbillies? Probably not. You're probably too young to know it. But the song goes, "Come and listen to my story about a man named Jed, a poor mountaineer, barely kept his family fed." What does that have to do with anything on this video? Nothing at all, except I want to tell a story, and that's the first thing that came to my head. And I'm feeling in a good mood, so I thought I'd try to be funny. So anyway, so this whole stock idea goes back to, if you remember, I went to Vegas back in, I think, June of this year with my wife. The pandemic was starting to lower. A lot of people were traveling, kind of wanted to get out of the house. And so we went to Vegas, and it was a fun trip. And specifically, I normally don't gamble. There was one machine. It was called Press Your Luck. It was one of those new kind of slot machines. And slot machines, generally, you don't make money on. They're just for fun, right? Now, this one looked really interesting. It was very interactive, had the screen above it. It was really cool. And I used to love that game, Press Your Luck, right? So Press Your Luck. My wife and I ended up playing this. We won quite a bit of money on it as well. And we played it for like 3 hours. And I don't gamble. I've been to Vegas like more times than I can count, a lot. And I generally don't gamble at all. Like, I won't even go to a slot machine, a table, nothing. I kind of hang out. I walk the strip. I enjoy myself, have a nice meal, go to a show. I like the hotel rooms, things like that. But I generally just don't gamble. It's just not my thing. And nothing against people that do. But anyway, so we made some money on this. It was profitable, and it was a lot of fun. And I'm like, man, imagine if you could invest in something like this. This seems like a great idea, you know. And I didn't really think much of it. Then I was doing a scanner a couple weeks ago. I was looking specifically for small cap growth, and this stock came up, and the growth looked insane. I'm like, wow, look at this thing. Like, how could it have 350% growth? Well, then when I realized what the company did, is like, oh, okay, it's related to casinos. Okay, casinos got hit really hard during the pandemic. And I didn't even put it all together right away. I went to the investor deck, which I'm going to present to you here in a minute, and go through some of the highlights of that deck. And I was actually really interested. And then towards the end, after I've already done my due diligence, I discovered that Press Your Luck it's a slot machine that these guys own and operate. And when I learned about the model, how it's a recurring revenue model, I couldn't resist. I'm a software as a service type guy, anything with recurring revenue. So this really plays with a recurring revenue model. It also dabbles in Fintech and even a little bit in the software. And they're positioned really well for what they call the cashless future of casino operations, which I think is pretty exciting, because you think about it, maybe some people like putting the bills into the slot machines and things like that, but it's also pretty cool if you can do it all digitally through your phone and like not have to stand in line to go up to the cashier to cash out and things like that. That's the part of Vegas that for me is not very fun. And not just Vegas, this is casinos everywhere. So the company, guys, is Everi. The stock ticker is EVRI. And you're going to want to see this information I present to you next. Stay tuned. All right, guys, let's get it kicked off here. Everi Holdings, Inc. This is the investor presentation for March 31st. Now, they are going to have earnings here in early November, so keep that in mind. You might want to wait till you see what the next earnings does. Okay, so Everi, who we are, innovative gaming technology supplier operating two high-value product segments that generate significant recurring revenue. Hey, I like recurring revenue. Tell me more. Both business segments powering return to pre-pandemic growth. And this could be a recovery play that actually could do even better. Wait till you see the numbers and how bad the comps were in 2020. So check this out. Gaming, a leading developer of differentiated, entertaining, player-popular games and other gaming services. So I mentioned the one with Press Your Luck. There's a bunch of other ones like Shark Week, and there's a ton of them. They have a lot of machines, some really cool machines, and ones that are most popular. In fact, when I was at the casinos, the machines that people were at most were a lot of times these machines, especially in the nicer hotels. So I was in the Venetian, I was in the Palazzo, I was in the MGM Grand. We went into the Wynn, the brand new casino they just opened. I can't remember the name of it. We were all over the place, and we saw a lot of these machines that did pretty well. There's always people at them. And then they also have Fintech, which I think is a really interesting component to this business. They've got integrated financial products, information, and regulatory compliance software. So they're kind of doing this one-stop shop, especially for some of the smaller casino operators. And they also have loyalty tools. So you add all that together, it's a pretty interesting ecosystem. Okay, history of long-term growth. You can see here revenue and then adjusted EBITDA. So on the left-hand side, you got revenue, okay? You got 2016, you can see they grew a lot. They were doing really well before the pandemic, and then they kind of fell off a cliff, not surprisingly, right? Adjusted EBITDA, same thing. So the comps are actually going to be pretty simple for these guys to beat, which is something to consider. So you see these big growth numbers. It's not necessarily the same as something that didn't get impacted by the pandemic. So keep that in mind. But I actually think that these guys could likely get back to those 2019 levels and press way above them over in 2021, 2022. I think this is going to be a good 2022 play where these guys really start to fire on all cylinders and actually get back into growth mode. Free cash flow generation in Q1 2021 nearly equal to all of 2019. That's pretty impressive considering that they're still impacted somewhat from the pandemic, okay? So some people might argue, well, they had a big pull through. A lot of people are going to go and they're going to get sick of it. That could happen too. But from what I see from my friends and family and everything, most people haven't really even gone out that much. I think you're going to start to see that accelerate even more when we get into 2022. Just some highlights here. Long-term growth drivers, new product roadmap, trying to get new diversified games. So they've got Empire Flex, Empire DCX. They keep coming out with new games, and I think they're pretty good at it. They leverage their fintech network to build a digital neighborhood, they call it, okay? So they expand fintech offering through innovative development and tuck-in acquisitions. Acquisition and subsequent growth of loyalty products and services, launched commercial field trial of Jackpot Express with Caesars Palace. So they're actually partnering with Caesars Palace, which I think is huge. Potential game-changing mobile CashClub Wallet based on integrated enterprise-wide system technology that combines cashless funding with player loyalty tracking. So it's pretty cool stuff. iGaming, they got tuck-in acquisitions, and then also international expansion opportunities. Now, this is actually really interesting. So this is the gaming market, US gaming market, and you might not have a lot of insight into this, so it's important to cover it. Now, that blue line, they're calling it, tribal casinos, okay? So it says historical strength in tribal casinos favorably positions Everi in a faster growing and less cyclical portion of the gaming market. So they're saying that to be in those tribal casinos, they're not going to have as many ups and downs, as many cycles. You can see, the green line is commercial casinos, and it's kind of had some ups and downs. This goes all the way back to 1993 to 2019, and you can see this is really spiked. Now, if you watch Yellowstone, you know all about this blue line here. Increasing product penetration in commercial casinos as well. So they're doing a good job on that, and that's where we experienced their machines in Las Vegas. Offers significant potential for growth, and I agree with that. In fact, guys, I think that Everi is a good buyout candidate. I think it wouldn't be surprising for them to get acquired and someone to pay a nice premium for them. Gaming industry is huge and it's growing. US gaming industry, $78 billion in gross gaming revenue. That's a lot of money. And tribal gaming revenues increased 10% to $34.6 billion in 2019. A bunch of information on here. Everi processed more than 115 million financial funding, cash and cashless transactions. That's a lot. Is up 7% year over year. So that's not huge growth, but solid growth, providing more than 10 million players with 30 billion plus of cash, up 10% year over year. Everi estimates that it has 45,000 plus gaming units on casino floors across the US and Canada, an estimated 4.5% of the total installed units. So you think about that, 45,000 is a huge number. It's only 4.5% of the installed units. More than 1 million gaming machines are in the US and Canada. That number actually just boggles my brain. Includes slot machines, video lottery terminals, and non-casino venues, and other other electronic gaming machines. Okay, this is a huge slide, important. Large recurring revenue base. Approximately 82% of LTM Q1 2021 revenues were recurring in nature. 82% recurring. Now look at this wheel here, this pie chart. Gaming operations, 41.8%. Financial access services, 27.8%. Software and other, Fintech, they're calling it 12.4%. Gaming equipment, systems and other, 12.9%. And then Fintech hardware, 5%. So they're doing the whole thing here. Gaming operations, this is really cool. Leased gaming machines generally are placed on a shared basis revenue with casino operators. Approximately 30% of the total install base are units under multi-year placement contracts. All other standard and premium participation units generally remain on casino floors for as long as in-casino performance is acceptable, with periodic game theme updates provided to refresh in-casino performance. They also have financial access services, revenue earned on transactional activity under multi-year service contracts, usually 3 to 5 years, generally sticky, long-lasting relationships. Average length of Everi's top 30 customer relationship is 12 years. They've been working with their average customer in the top 30 for 12 years. Software and other, primarily player loyalty and regulatory compliance software. So they actually do regulatory, governance, risk, and compliance type software, GRC software, product subscriptions, and kiosk maintenance services that are integrated into casino daily operations and generally provided under annual or multi-year agreements. Everything about this company is getting their product into casinos, getting long-term multi-year agreements, making relationships sticky, and generating recurring revenue off of them. I like the business model a lot. So they have video type games that are electronic. That's like the press your luck I was telling you about. There's also the older school mechanical, which kind of a blend of mechanical as well as sometimes they have graphics involved as well. So sometimes you see kind of a hybrid between the two, but they do video and mechanical both. Driving meaningful growth. Premium units represent 42% of total install base in Q1 compared to 22% in Q1 2019. That's a 20% increase. So these premium units, they're high demand. That's what it's telling you. It's telling you that these casinos want these high-end, these premium units, and that's going to continue to grow. Growing product portfolio, so standard video, standard mechanical, and then torrent event. Leveraging our success in land-based casino games and game development to distribute our content into rapidly expanding online iGaming market channel. So their key markets, Michigan, New Jersey, Pennsylvania, West Virginia, British Columbia, Manitoba, Quebec. Also, this just came out yesterday, 10/26. Everi signs 5-year agreement with Delaware Lottery to provide popular 3-reel mechanical and video slot content, including progressive titles. That's big news. Of course, we want to see the iGaming TAM here. So $1.7 billion in 2020, projected by 2023. $3.7 billion, so significant growth in the iGaming part. Okay, so the Fintech guys. Pre-COVID 2019, revenue grew 19%, adjusted EBITDA grew 11%. Same store increases in cash and cashless funding volume, winning new customers and casino expansions. You want to see that as an investor. Cross-selling opportunities, introducing new innovative products. We mentioned some of them earlier. Now, they're also saying that their player loyalty business contributed some of that growth, so you might see some explosion in that area as well. So again, you can see, guys, the revenue and the adjusted EBITDA fell off in 2020. I see that improving though, 2021, 2022. I think they get back to those 2019 levels and exceed those. So industry leading products and services. So a comprehensive suite, basically interconnected suite of financial technology, regulatory compliance, and player loyalty services and solutions integrated into casinos' core operations, often featuring casino patron self-service. That's really important. I think that could be the future. Continuous innovation of products and services to enhance value for current and future customers alike. So you got the financial services, access services, the software and the reg tech they call it, and the kiosk and the hardware all kind of working together as one solution for those casino operators. Okay, so cashless gaming. Here's some of the benefits for both operators as well as patrons. So gaming operators on the left-hand side, reduce cash on hand, increased efficiencies and cost savings to front and back of the house operations alike, spend player intelligence, you get detailed analytics so you can do a better job marketing to your customers, extended play engagement, increased convenience leading to increased play, right? On the patron side, it's a true cashless offering. So digital enterprise-wide currency across multiple properties and jurisdictions, just as good as cash. It's very convenient. Meaningful incentives, tailored promotions based on the spending habits so they can promote things that you want to hear about. Continuous play, never leave game of choice for additional cash. Funding anytime, anywhere. That probably benefits the operator more than the patron, but it is convenient that you could literally not have to get up and you could do it from your phone. So they're calling themselves positioned for cashless, contactless gaming industry leadership. partnership. So it says established 33 transmitter licenses and 1,001 gaming supplier licenses through US and Canada. Digital neighborhood, there's the CashClub Wallet we talked about, positive adoption trends. You can see on your screen, there's a lot of cool stuff behind the fintech side of the business. So enterprise-wide digital CashClub Wallet app. If you look at this, you've got cashless and touchless up here, self-service, you've got online sports betting, you've got the on-premise as well as online. So you got the the iGaming you can do on your phone anywhere, anytime. You can also go to the casino for the weekend and have fun with your wife or the boys or the girls or whatever. Loyalty offers. You've got security. You've got responsible gaming, you've got compliance, you got regulation, provides compelling patron experience, offers operator cost efficiencies and 360-degree patron tracking, and prospects for more transaction activity and new revenues. Player loyalty and marketing, highly complementary to the fintech portfolio. This is kind of another pillar of their business. It helps drive growth, supplements current fintech solution offering, seamless connection between casinos' loyalty programs and their patrons. So you can see there's lots of different kind of heads to this monster, so to speak. Platforms and software focus on supporting operators' needs for player loyalty, enrollment, marketing, promotional software, and self-service kiosks. So you can see the kiosk on the left, the promotional kiosk in the middle, and the mobile loyalty on the right. Okay, guys, so a quick summary, investment summary. Robust base of recurring revenue. That's the part that really sticks out. Approximately 75% of 2019 revenue historically recurring nature. It's actually even higher than that now. Sticky 3 to 5 year contracts, which is great. Regulatory compliance and player loyalty subscriptions integrated into the casino operations and the protocols. They have 15,949 installed games. This is as of March 31st, 2021. On a fixed fee or revenue share lease, 42% premium units are driving record DWPU. They also have this agreement here to basically help the New York Lottery. That's over 17,000 VLTs renewed for additional 10 years. That's actually really important. Sustainable long-term growth drivers. You can see high-performing premium game performance, and that's growing. The fintech, the white space opportunity to drive market share for commercial and tribal gaming as well as online. So you really have, you think of Vegas, you think of the tribal casinos, and you think of the online, the iGaming, the applications. There's a lot of opportunity for growth between those three segments. Additional tuck-in acquisition opportunities, international expansion opportunities. Everything's for the most part in the US and there's some in Canada. Growth potential of gaming units and transactional value. So strong portfolio, proprietary and branded Class 2 and Class 3 games. New cabinets launched in 2020. We mentioned some of those that press your luck. Those kind of games really will draw people that normally don't even gamble. Like I normally don't even touch a machine, but that drew me in, right? So that's important, I think, to note. 60% of fully integrated kiosk placements are at least 3 years old, which is expected to drive ongoing replacement sales. So people are going to replace those units. Gaming equipment quarterly ship shares and floor share to new casino openings are higher than historic levels. That's a good sign right there. Number of financial transactions and value processed continue to grow on a same store basis when casinos are open and active. So that's actually a really positive sign. High value products and services for gaming operators. So offers casino operators a comprehensive, high value expanding portfolio of game content, game devices, financial technology solutions, regulatory compliance, player loyalty tools, and then drive revenue and cost efficiencies. This is a great story if I go and try to position my company, if I'm Everi, to a casino, because it's given them a really nice package that can do a whole lot of good for them. And the cool thing about it is they can just sell one piece of it. They can just sell the machine and they don't have to sell the fintech and all that. It's something they can stack on. So that upselling and those cross-selling opportunities exist with existing as well as those future customers. Strong free cash flow. Game segment capital investments have improved capital efficiency and incremental cash flow. That's really good as an investor. Targeted capital expenditure for premium game installation drives strong operating results. Over 3x cash flow. So targeted capital expenditure for premium game installations drive strong operating results. And then over 3x free cash flow growth between 2016 and 2019. With Q1 2021 free cash flow essentially equal to all of the free cash flow from 2019. So in one quarter, their free cash flow was equivalent to everything they did in 2019. That's very bullish as an investor. The company had been on track to reducing total debt prior to the pandemic with a long-term target of 3x to 5x. Everi completed a $125 million incremental term loan in April 2020. Basically, they had to borrow money to stay solvent. Okay, let's wrap it up with a quick chart. I'll give you my opinions on the stock and what I'm going to do for my portfolio. So I'm on TradingView here, and you can see earnings are coming up here on November 3rd. So that's not very far away. I'm probably going to be a little bit cautious here and wait. I currently do not own any shares. The green line here, this green line is going to be the 50-day. The yellow line is the 100-day. This red line is the 200-day. These are all simple moving averages. So it's trading, you know, it's trading a little bit hot, not crazy or anything, but it's trading a little bit hot. You know, if you do a trend line, it's probably trading, you know, a little bit high, but it would be nice to see it under $25. You really have to wait to earnings, because who knows what's going to happen. If earnings are bad, this thing could come back to, you know, who knows, 20 bucks a share or something like that. So I'm going to be waiting on this one. I may nibble some shares before earnings, but I'll likely wait. If I do, it's going to be a very small position, maybe a fifth of the position that I want to own. I'd be willing to go maybe up to $15,000 on this one in the portfolio. Portfolio is sitting just under 1.75 million right now. It's had a little bit of a pullback from the very top. So that's what I'm going to do, guys. I'm going to look to add a little less than 1%. It's kind of it's a spec type play, but really it's not. I mean, if you look at it, it actually has solid fundamentals. So it's kind of a recovery type story. It's in that gaming story, which I think is good. The only thing I own right now is DraftKings, and I think it helps complement the portfolio. And I like the recurring revenue model, and I like the company. I like the games. I like the story. My due diligence, I didn't find a whole lot of holes in the story. So, you know, I think it looks pretty good here, but, you know, be careful. I'm not a financial advisor. Can't tell you what to buy or sell. If this video is helpful and you're not a subscriber, subscribe to the channel, click that little bell to get notifications. And if you want to do me a favor for bringing this information to you, all you got to do, click the like button, click that like button, drop me a comment, just say, hi, Eric, or nice video, or whatever. Say, hey, Eric, I don't like Beverly Hillbillies, if you want. But drop me a comment, drop me a like. I appreciate your time and attention. Hope you have a great rest of your day. Take care.